Hello and welcome to the Friday market update. Well, rates popped up above 6.5%. We'll get into that in a minute, but when will this end? That's a question right now driving global markets and Wall Street. And the truth is, there's no clear answer. The conflict continues, and with it comes uncertainty. At the center of all this is one thing: oil. Oil and energy. Gas and oil don't just power cars, they power economies. They impact transportation, manufacturing, food costs, and just about everything we touch in our daily lives. And even though the US has become much more energy independent, we're still part of a global economy. When other countries struggle with energy supply, it creates a ripple effect everywhere. You're already seeing it in places around the world. Fuel shortages are leading to blackouts, instability, and real hardship. So that's the human side of this that often gets overlooked. I feel bad for so many people out there. Now, bring it back to something we can all relate to. If something breaks at your house, it takes time to fix. I'm dealing with it right now with my pool. I needed a new part for my panel, and they ordered the part. The part came in, it was the wrong part. It was too new for the old system that I had. Now I have a system that's outdated, and I need a full replacement. It's frustrating. It takes time, and it costs more than I expected. Now imagine that on a global scale. Refineries, infrastructure, supply chains, when those get disrupted or destroyed, which they are, you don't just flip a switch and fix it. It takes materials, labor, manufacturing, logistics, and most importantly, time and money, not to mention all the people and skilled labor to build it all back. There are a lot of moving parts. It doesn't happen overnight. And when it costs more to rebuild and operate, that leads to one thing: inflation. And inflation is the kryptonite to interest rates. When inflation rises, interest rates rise. Now, that's exactly what the market is reacting to right now. They are anticipating future inflation. Before all of this, inflation had been trending in the right direction. We were coming off those highs that were north of 9% and gradually moving lower down into the mid twos. The Fed has been watching it very closely for the past few years, and they were getting a handle on it. But now, with the rising energy prices and global uncertainty, markets are starting to price in the possibility that inflation could come back. How strong will it? We don't know. And the longer this conflict drags on, the more uncertainty builds. Now, more uncertainty leads to more caution. More caution leads to higher oil prices. Higher oil prices feed right back into inflation expectations. It becomes a cycle. I was talking with a 20-year active duty military veteran yesterday who's been deployed multiple times. His perspective was simple. He says, this isn't something that really resolves overnight. Iran is big. You're dealing with deeply rooted systems, cultures, and long-standing tensions. Change is slow, and it's not always welcome. Change is hard, as we all know. So the reality is we just don't know how long this is going to last. And markets don't like not knowing. They want to be in the known, not the unknown. So how does all of this impact mortgage rates? Rates have definitely moved up. It was a bad day today. In fact, we're seeing some of the sharper moves we've seen in quite some time. But let's kind of zoom out for a second and keep some perspective. Even with this recent jump, we're still below where rates were a year ago, and we're still under that 7% level. Yes, we're above 6.5%, and yes, it's going up. I don't know how much more they will go up, but there is pressure. But we're not back to the extremes that we've seen before. Now, what does this mean for home buyers? Typically, when uncertainty increases, buyers pull back. They hit the pause button. They wait. They try to figure out what's next. What's the right move? Is it the right decision to buy or sell? Should I do it right now? And that creates opportunity for those that are smart, that are educated, because while many buyers will be sitting on the sidelines, there are fewer offers, less competition, and more room to negotiate. I believe more incentives will start to pop back up. As we were seeing rates decline down to that 6% level, I was starting to see some of those incentives shrink a little bit, and some of them went away. I believe those incentives will start to increase again, and buyers can get those. This is where savvy buyers step in. They negotiate better prices. They secure seller concessions. They position themselves ahead of the next wave of buyers. Because here's what we know. When uncertainty clears, buyers come back. And when they do, competition increases and pricing pressures follow. That's why I always say it's not about timing the market, it's about time in the market. The buyers who win long term are the ones who take action when others hesitate. So if you're working with buyers right now, this is the message. Get them educated, stay focused, look for opportunities, help them see the bigger picture. There are definitely deals out there to be found right now, and those willing to move forward will win. This moment too shall pass. And when it does, the people who acted during uncertainty are usually the ones who come out ahead. So educate your buyers and sellers so they can be that buffalo, run through the storm to come out ahead in the long run. Hope you have a great weekend. Hang in there. Stay with it. This is Gaylord out. Bye-bye.